This is one I've been looking forward to for many weeks now, because it's a particularly good MA, and our first for a number of weeks as well. So I'm so delighted to introduce Michael Anderson from Framework Ventures, who's going to be answering your questions today. He is one of the leading investors in the space after founding Framework in July 2019. And it's with many people in crypto, you might not be able to state their background as stellar, but in Michael's case, I can say with the fullest confidence that you will not find a better CV realistically. He was at Snap, he was at Dropbox, he was at Barclays, he's a graduate of Yale, he founded his own startup. I think if you're looking, quite frankly, if you're looking for the archetypal, like I want the dream CV, this probably is it. And I'm sure, and he was at Apple. I forgot one, and he was at Apple. So yeah, we've got all the big names there. So Michael, thank you so much for being with us today. I kind of want to start things off with quite an easy question. When you were at Yale back in the day, were you thinking entrepreneurship? What were you thinking? I'm just going to go into banking. Were you thinking, what was your kind of goal for life looking kind of 5-10 years ahead?
Well, Anthony, thank you for having me. I'm really excited to be here with everybody, and I really appreciate the kind words. So I grew up in Palo Alto, which, for those of you that know, is kind of the epicenter of Silicon Valley. I kind of feel like I had startups in my backyard when I was growing up. And when I went to Yale, I knew I wanted to study something technical, but during September, the first month of my freshman year at Yale, Lehman Brothers collapsed, and the world descended into global financial crisis. And so I started to get really, really excited about what was going on there, and fascinated with what was happening in financial markets, what was happening with the global economic outlook for the world. And so I found myself kind of stuck between economics and computer science. And so I decided to study both. But what I did afterwards was kind of flirt between the two different worlds. As you mentioned, I had an internship at Apple. I had an internship in investment banking. I was always fascinated between the combination of finance and technology. And so my first job right out of college, I decided to go work at Dropbox, where I was a product manager building financial technology products. And so what this meant was anything, that touched money. So payments, commerce, billing, those were the products that our team built. We were doing that during the day, and that was my day job. But I quickly fell down the crypto rabbit hole in 2012 and 2013, and started spending all of my nights and weekends researching that. So for me, it was always kind of curiosity that led me in the directions that I ended up going. But I think it was sort of finding the intermedium between finance and technology that really drove me forward.
Absolutely. I forgot to say in my excitement about how this event should work, by the way, guys. So I'm going to do about 15 minutes of questions, just lead the discussion, get a few thoughts in the air, and then I'm handing over to all of you guys to ask questions. So you have the raise hand functionality, those that have been there before, so you can kind of ask questions live, or if you want to put them in chat, George will collect those and ask them. But start getting your questions ready. Well, kind of linked to that, this is a crypto discussion, but I think it's worth kind of touching on kind of Dropbox and Snap. So these are obviously big startups. What's the culture like, and how does that culture, this kind of San Francisco culture, compare to crypto right now, which obviously is a very decentralized remote environment? But yeah, what's the kind of, tell us more on that.
Yeah, so I think the things that I got from Dropbox and Snap was just a really intense understanding of how to build consumer viable products. How do you work with a team of engineers to build something that scales to millions or hundreds of millions of users simultaneously? And that deep understanding is just not something that you can get in college. It's not something that you can learn from a textbook. You really have to be in the weeds, understanding what it means when you have a bug and how that could be preventing users from doing things in real time, how you can build systems that scale, and how you can work across functions between engineering, finance, design, marketing, legal. And so that kind of crucible of understanding is really what I got from those companies. But then when we moved over, and we being my co-founder Vance, to work in the blockchain space, you have to basically rid yourself of the predominant ways of thinking in traditional technology. When you're working for a company like Dropbox or Snapchat or Google or Facebook or any of the major technology companies, you have to think in terms of proprietary IP. You're building technology that's core to the company. You're developing your moat based on whatever you can build and how you can build network effects. And when we think about open networks and open finance and open blockchains, that is completely opposite. And so one thing that we had to change was our perspective on how you build a moat, how you build defensibility. Everything that you build from a technology perspective is on chain. Anybody can copy it, anybody can look at it. And so that mentality shift really shifts to what I would describe as the open source mentality, where you're doing things in transparent ecosystems, you're doing things with participants who you may have never met. Whereas at a company like Dropbox, you know everybody on your team. And in Ethereum, it may be an anonymous participant in the core dev community that you're working with. And so that definitely was a shift. But I think if you can understand that and you can get ahead of that, you can leverage a traditional technology background to be beneficial for an open network background.
Awesome. And kind of semi-links to that, I want to talk kind of a few minutes on Hashletes, which looks before it was at the right time, but now looking at what happens 2 years later, when we look at kind of Top Shot and Sorare that have done particularly well, it looks like it was there. It was like if there's been 2 years later, it would have kind of been there. So what were your thoughts? Obviously, you took the leap. You're in the startup environment. You took the leap. You set up Hashletes. You did it for a year. What was that process like? And do you kind of think, shit, you've done very well for yourself anyway, but wow, God, could have been the kind of NFL playing card of the future. What's your thoughts around that?
Yeah, I'm convinced that there's no bad ideas in startups. It's just bad timing. And I think it's fantastic to see everything that Top Shot and Solar are doing right now, because we believe that blockchains should create this new product category. And it's unfortunate that it wasn't Hashletes. As you said, we're still happy. And frankly, it builds a strong understanding of where we're investing next. We started Framework with a very much decentralized finance focus, but now we're expanding that focus because non-fungible tokens are back, and that's right in our strike zone, because we spent 2 years running up the hill, taking all the arrows, trying to build Hashletes. But the things that I will say about Hashletes, and just when you're early to a market and you know that there's something that works and it's really hard and you're just getting stopped at every left and right, it's possible to rethink things. And that's also okay. If it feels too hard, it might just be the wrong time. And so being honest, intellectually honest with yourself around, is this working? Is this not working? Is really kind of the process that we went through. And in early 2019, when we ended up selling the business, it was the right call, because it wasn't possible to build a consumer viable application on Ethereum at the time. Top Shot has had to build their own blockchain just to be able to get it out there. So that I think is definitely a lesson, but I'm really excited for the future of non-fungible tokens.
And just on that, it's perhaps premature in the discussion, but it wasn't viable to build on Ethereum then. 2 years later, is it too viable? Has it become too popular? Too impossible? Have we gone full circle?
It's a different set of problems for sure. It's expensive. It's slow to build on Ethereum right now. Some of the announcements that have happened over the last 2 weeks, I think, will alleviate a lot of that pain. Optimism and Arbitrum are going to be launching in the next, I'd say, month or two. We're going to start to see Ethereum scale in a way that we just haven't ever before. And all the competitive chains, Flow, Solana, Polkadot, Binance Smart Chain, all of those are going to be things that expedite the process for Ethereum to get to the table stakes functionality that they already have. So I'm really excited to see the competition. The way that we view the world is we invest at the application layer, and I'm sure we'll get into some of those. But when we talk about base layers like Ethereum or Polkadot, we see those as operating systems. And in the same way that when we were at Snapchat, it was a big question as to whether or not we were going to build an Android version. And that decision and that process took 2 years. And we kind of see this as a similar situation where iOS may be kind of the chain that's working right now, but if you want to access more users, you got to move your application over to a different chain because that's where the users are. And so I think we're going to start to see a lot of the predominant Ethereum applications potentially move over to other chains as well.
Absolutely. And I just on that, guys, I know we had Polkadot Avalanche and BSC in the hackathon, so I'm going to put the summary there for anyone who wants to read about some of the great things. I know we have some of the prize winners here today that are going to be asking some questions as well. So let's get on to framework. So what I want to know is obviously there was a kind of bit of, you got into the space quite early. You obviously think about the space, investing into the space. How does framework come to be? What's the moment you go, actually, this is the time. Let's double down here. We've sold the startup. We're going to be investors now. Well, how did that come to be?
Yeah, we got very lucky with the starter framework. When we were working on Hashletes, we got to know a number of investors in the space. Like I said, we decided to sell Hashletes as opposed to continue forward and raise a subsequent round. One of the investors who was looking to lead or be a large participant in the next round of Hashletes, we stayed close with him and his team. And Vance and I were planning after Hashletes just to kind of continue on and maybe to work on a new project, maybe continue angel investing in the space. But he said, what do you guys want to do next? And we kind of had this thesis for framework or what became framework for a new type of investment product and investment vehicle, investment firm for blockchain assets. And really kind of the thesis there was that the traditional venture firms were really just buying and holding these assets or investing in companies and not really even caring about tokens, but they weren't able to use tokens productively. And then you had technology companies that were building tools and services on top of the protocols. And then you had hedge funds who were taking a very short-term kind of trading mentality to these assets. And what our view was that to be the best stewards of these networks and these investments, you really had to do all three at the same time. And so with Framework, we built the purpose-built, venture firm for blockchain assets, where we actually have, a venture fund and soon to be venture funds. But we also have this kind of other entity called Framework Labs. And in traditional venture, maybe you'd call it a management company or sort of the general partnership. But we structure ours very differently in that we're a technology company. So at our core, Framework is a technology company where we're building software and services and tooling alongside the protocols that we invest in to be the best stewards and active participants and hopefully some of the largest users of the networks that we invest in. So we pitched this idea and fortunately our core investor in our first fund said, great, I'll fund it. And then we were off to the races.
Phenomenal. And I want to kind of ask about the kind of role of network versus thesis in kind of blockchain. And network, I mean, in terms of social capital and kind of getting into deals, being part of deals, kind of, is it what is the tension between the two? Are the best investors those at the best network? Are all theses kind of fundamentally the same and they're all kind of synonyms of each other? How would you kind of look at that side of things?
So we took a very strong thesis in July of 2019 when we started the fund, and we started it with the anticipation that we would be investing in things like non-fungible tokens and Web3 and decentralized computational services from the get-go, and that was kind of the thesis that we had pitched. But about 2, 3, 4 weeks in, we started digging deeper onto DeFi, and we just decided that this is the only thing that works right now. This is the only thing that's purpose-built for blockchains. And so we went back to our investor and said, hey, this whole thing is going to be focused on DeFi. He said, great, yeah, go for it. But the thing that I think now has happened is that the industry has matured. There's so much more capital. There's so much more attention that it's so difficult to have a differentiated thesis because there's just too many participants. And so now what we focus on and we, I think, have kind of minute differences to other participants in the networks, and we like to stand by our theses, but the ability to just say, hey, I'm going to bet the farm on DeFi it is undifferentiated at this point. And so now you really have to dig into that brand to get into deals because it's probably the most competitive environment that I've seen for investing in this space ever.
Absolutely. On that note, I want to kind of, so guys, please do start putting your hands up. We'll start collating the written questions. I'm going to do 1 or 2 more myself, and then we'll kind of hand over to you guys to kind of lead the discussion. So I kind of want to talk about kind of a cringe when I say this, kind of things being overvalued right now. But I want to take one in particular. It was kind of actually a sponsor of one of our hackathons 2 hackathons ago, the graph. And this is something that's outstanding technology, outstanding tool, outstanding team. Evaluation that if you take it, compare it to the real world, makes people go, okay, what's going on here? So how do you value this stuff? And how do you reconcile what should be worth long term with kind of short term kind of pressures, especially with this kind of VC mentality?
Yeah, so we're lucky in that we play at the very earliest stages. So valuation doesn't really become that big of a factor for us. You know, when we're talking to a team, sometimes it's just a founding group and they have an idea and a pitch deck. Sometimes they have some kind of prototype or beta product and they're looking to launch in the next 6 to 12 months. And so for us, it's really evaluating kind of who's the team, what's the product, what progress have they made, what's the market, and if there is any traction, what's the community look like? And so for us, it's not really about is the graph valued fairly right now or not. The way we think about making an investment and then eventually selling an investment is, well, in terms of making an investment, it's very early, so valuation isn't a huge factor. In terms of selling, it comes down to 3 factors for us. The first is, has the team reached the full vision of what they wanted to accomplish, and have they achieved that? The second is, is there sufficient decentralization so that if we were to sell tokens or kind of pull back support, it would grow unencumbered, continue to grow unencumbered. And then the third is really kind of, is there market infrastructure to support, us kind of leaving behind this network? So is there someone to kind of fit in after us? And so we have yet to hit all 3 of those milestones with a single investment in our first fund. So some people may say that we're crazy for holding on this long, but we take an extremely long approach to everything we invest in, and up, down, sideways. The numbers are just kind of afterthoughts.
Absolutely. Right, we've got some live questions coming in. So buckle up. Let's first go to Vijay. Vijay has had a good week. He won, he's building a flash loans platform on Avalanche and Binance Smart Chain and took top prices in both of them. So Vijay, over to you, whatever you want to ask, fire away.
Thanks, Anthony. I'm Michael, really excited. So my question is more around your thoughts on layer 2 and migration to layer 2 and how lending platforms will progress over that. And myself being in that space, I'm thinking like, should I orient my startup more towards layer 2 or should I just stick to other layer 1s? Thank you.
Great question, and congrats on the progress. So I think what's happened in the last week is there's been a lot of attention and excitement around the change in timeline for Optimism. Optimism being kind of the ETH core dev favorite for optimistic rollups on Ethereum, and then Arbitrum, which is created by Off-Chain Labs. They're expected to be launching in the next month or 2 as well. And so I think we're in the middle of a horse race, and it's going to be a battle to see kind of how this all plays out. I do think that optimistic rollups as a category on Ethereum will be the first to launch. ZK rollups will probably something that's maybe 3 to 6 to 7 months behind. And so I think, thinking forward, it's going to be potentially a VHS Betamax moment where Betamax may have been kind of the technical favorite. It may have been the one that had better capabilities for movie playing back in the 90s or 80s, whenever it was. But VHS had the distribution through its partnerships with Panasonic and Sony, and that's the one that got adopted as the new protocol form factor. So that's kind of how we think about it right now. That being said, we haven't made any investments in layer 2. We really try to stay at the application layer, so I don't really have a dog in this fight. But I do know that some of our applications, namely Synthetics, have actively said that they're going to be supporting Optimism. And so you may see a lot of kind of attention coalescing around a single one based on the applications choosing to move there versus others.
Awesome. Right, over to Jordan. Jordan is he's gone through one of our hackathons. He's gone through our Algorand accelerator, and now he's building it's a football management NFT game. And he also set up the Bristol, or used to be president of the Bristol Blockchain Society. So Jordan, over to you next.
Yep, great to have you here, Michael. Yeah, as Anthony said, my name's Jordan Lord. I'm currently working on a project called Futium with James O'Leary, who is also here today. So it's a football management soccer simulation game, which it works across Algorand and Ethereum, and where the football players and the football clubs are NFT tokens, which improve over time given match experience. And the matches are simulated off-chain as part of a provably fair game engine. I was wondering if you could tell us a bit more about your experience with Hashletes, perhaps some mistakes that you made and stuff that went well, business models that work in the NFT-based sports games, and what advice would you have for a startup like us, which is similar to Hashletes?
Yeah, I was going to say this is very similar to Hashletes. So what we started out with Hashletes was, when it came to non-fungible tokens, you kind of have two camps that you can go into. You can go into new IP, like at the time it was CryptoKitties essentially, or you can have known IP. And known IP, the difficulty there is that you have to get license rights. At least in the United States, with any of the major sporting leagues, you have to go through either the players associations and or the league to get any sort of content rights. And the restrictions placed on us were, we couldn't even have like the names of the teams until we had the NFL license. We couldn't have both of the colors for the teams until we had the NFL license, and it just became such a burden. Because there was lack of consumer demand, but there was also increasing costs on the licensing side. So ultimately, that's why we sold it. But the things that I would say we learned is that, and are learning, is that there is a direct connection and an emotional connection to sports, and sports has that probably more so than any other kind of venue of opportunity. So, I definitely think that sports is a great place to be using this. The other thing that I would say is when it's just something that's visually appealing, crypto art like hash mass or crypto punks, what you're lacking is functionality. And so when we built Hashletes, yes, there was a component that was a digital collectible where you had the player, you had the image, and you had kind of the attributes about them. But our core functionality was being able to buy, sell, and trade these collectibles and buy packs to see who you got, but then also use them in fantasy sports. And that, I think, is something that we're just starting to see now in terms of how you can add functionality to non-fungible tokens. For instance, I think the best non-fungible token that exists right now is ENS, because you have the capabilities of having something that is directly applicable back to the digital ecosystem with which you're using. So what I'm looking for, what we're looking for with the non-fungible tokens going forward is how you can tie back a functional use, as well as something that's potentially visually pleasing or scarce and has value because of it. I think there's some really interesting things going on in the art world where you can kind of piece these puzzle pieces together to form a larger piece of art. And also something in the games world where you're developing your own entire game space and using these assets to play games and in ways that just weren't possible before. So the lesson for us was sports works. Now I'd say non-fungible tokens have all kinds of excitement and intention. So I would say, operating with a tailwind is a huge benefit. And then the third is really think long and hard about functionality of the token, not just kind of the visual or the aesthetic of it.
Awesome. Right, George, you have some questions from the audience and that have been sent in. I'll hand over to you to ask those.
Yes, thank you very much for kind of entertaining us today, Michael. And we have one question that we got before the event from the Tsinghua International Blockchain Society out in Beijing. Obviously, quite late there, so they sent it over to me to ask instead, which was, what is the formal process of fundraising for anonymous projects? Because we've seen quite a few coming through the DeFi space. So how do they go about fundraising? How do VCs do due diligence in this kind of case? Any insights you could give on that?
Yeah, so most of what we invest in from the ventures perspective is something where there's a team that we've gotten to know. Our first and foremost evaluation is do we know this team? What are their capabilities? What are their strengths? What are their weaknesses? And do they have this mentality of being a world-class founder or founding team? And so that, when you're an anonymous team, it's really hard to assess. Ways that this can work is just getting in chat rooms or getting on voice calls and being able to actually assess this without actually seeing someone's face and knowing who they are. That can still happen. And so you just have to be able to effectively communicate that. We've made investments in projects where we don't know the names of the founders. They're smaller investments because you just have to size them proportionally. But that's not something that we shy away from. If it's a great team and they're very smart and capable, and it's a great idea, we will absolutely back it. In terms of formal process, I think if there's anything interesting, please let us know, and we would love to talk.
Definitely, will do. Okay, and then the second one, I've got one from chat from Stratos. And if you were a founder like many of our students are here today that are kind of great students finishing university. They want to perhaps run their own startup once they finish. What kind of projects would you be looking into building right now?
So the first answer that I would give is the right answer is whatever the founder or founding team is most curious about. Because I think you're going to have times where you're questioning what you're doing, why you're doing it. And if it's not something that's original or your core thesis, then it's going to be really hard to have those lulls. In terms of the places that I think are interesting right now, I just go back to non-fungible tokens. I think DeFi is like a core tenet of what we do. And I think that there are a ton of great open opportunities for essentially having more institutionalization and more complexity in DeFi. But with non-fungible tokens in general, it's just complete green space right now. And that I think, leaves so much room for opportunity. One example here is artists are coming to us and wanting to put non-fungible tokens on chain, but have all of the value of the secondary market or a proportion of the secondary market go to a charity of their choice. And having the ability to fundraise for a game or a piece of art where you're consistently driving revenue streams that go to a charity is something that just wasn't possible before and is a net positive for the world in my mind. And so that's the type of stuff that I think a little bit of creativity and ingenuity applied to something that's novel, like a non-fungible token that works now, that also has the financial capital, is probably where I would play.
Awesome. Thank you very much for those insights. And then a final one we have from Dan, which is, do you think that IPFS or Filecoin will replace Dropbox, given your history there?
I think it's Dropbox is increasingly becoming an institutional or enterprise level product. And when you're buying something as a business, you need to be able to pick up the phone and call somebody. I think that you might see some of the underpinnings of Dropbox turn over into IPFS and create that capability in the same way that when I was at Dropbox, we made the shift from AWS to our own storage solution. And for 4 years at Dropbox, it was completely, or 5 years, it was completely based on AWS. It was essentially just a wrapper and a product and a client for AWS. You may end up seeing something similar with IPFS, and Filecoin, but I haven't kept up with the team and I don't know what their roadmap is.
Okay, thank you very much. I'll hand back to Anthony for some more audience questions.
Awesome. Yeah, thank you very much, George. Keep the audience questions coming, guys. We will try and get through it. We've got a lot of questions. This is good. Right, over to Jake next. Jake is running Leeds University Blockchain Society. So Jake, over to you, sir.
Yeah, thank you for your time, Michael. It's great to hear from you. I just have a question. It's more from like a VC perspective. So as a VC, are you looking to invest in the individuals or like the initial tech that's behind the project? Like, are you looking at the talent or are you looking at the idea? Like,
yeah. Quick answer is both. But what I will say is this industry is the largest kind of gating item for this industry is just world-class founders. And this can come from anywhere. Crypto native, DeFi native, NFT native, having people who are really technical in nature with really creative ideas is the largest gating item for us to be able to make more investments. And for us, it doesn't matter where you come from, what your age is, where you physically are in the world, or as we just discussed, if you tell us what your name is. But I do think that if you can assess quality of the founder, that's how you get to an idea assessment as well. And in many cases, especially at the stages where we're investing, there's 3 to 4 pivots before anything launches. And so it's not necessarily the idea that you pitch that gets launched. And the only people that can decide how to pivot and when to pivot and what to pivot to are the founders. And so founder first is kind of our evaluation criteria.
Oh, awesome. Let's go to Hugo from London Blockchain Labs, which is a composite society of Imperial, UCL and LSE. Over to you, Hugo.
Thank you, Anthony. Hi, Michael. Great to meet you. So I have a fairly basic question, but essentially, where do you see the trajectory of DeFi going in the near future? And I'll kind of flesh it out slightly. So firstly, I remember hearing about DeFi early 2020, and it was the total value locked up was around $1 billion then. it shot up in the summer. It was a crazy summer, and everyone thought the bubble was going to pop, and it kind of went to 2021 and it didn't, and it's grown, you know, way bigger in 2021. So is this sustainable? Because I know that it is a very small amount of the crypto market in general. And secondly, do you see kind of moving into traditional finance realms, which subsets of DeFi do you think will be mainstream first?
Yeah, so you touched on a number of really good points. And I don't have the number off the top of my head, but I think 2 weeks ago, the total market cap of DeFi relative to the total market cap of crypto was somewhere in the 7 to 8%. And if we think about where most of the creativity and ingenuity is coming from over the last 2 to 3 years, it's all DeFi. And so that just feels like a mismatched market. I think there's a lot of things that are leading to that. Frankly, the difficulty with which getting Bitcoin over into the DeFi ecosystem, you know, that's kind of a difficulty bringing it on chain. I think that that's going to get fixed. But as we see more value flow into DeFi, I think we'll see DeFi increase. But you know, broadly speaking, our thesis around DeFi is that we now have the first developer sandbox for financial products. The infrastructure stack of finance has largely been unchanged over the last 40 years. And what used to take millions of dollars in years for a major financial institution to put out a new product now takes anyone on Ethereum weeks and maybe thousands of dollars to be able to produce and distribute to millions of Ethereum users all over the world. And these users, as we've seen, are willing to try and buy anything. So you immediately have, you know, thousands or tens of thousands of potential users immediately. And so I think that that's a really powerful thing. And if we think about what that means in relation to the size of these markets, we're talking about trillions of dollars. And the largest gating item for DeFi growth is the ability to access that capital, which is largely on the sidelines. And in conversations that we have kind of on a regular basis, it's going to be traditional financial institutions that are looking to access these markets that previously weren't able to. If you're a hedge fund manager and you want to deploy $100 million into DeFi, you know, how do you do that in a safe way? You know, the things that are still preventative of that from happening are things like regulated insurance products. If you're someone who has a fiduciary duty to investors, you need to have insurance for, you know, putting $100 million of USDC into Curve. And that is something that just doesn't exist yet. We're looking for it and thinking about ways of doing it. But the number of financial institutions that are starting to integrate this from the traditional standpoint are vast. And I think things like the letters that, at least in the United States, Brian Brooks, as he was the OCC chair, wrote, basically enabling trust banks and national banks to be able to custody Bitcoin, to be able to custody stablecoins and integrate with the Ethereum network. You know, that just happened in December and January. And so we have yet to see that play out because it'll take, you know, 6, 9, 12 months for those banks to actually be able to implement it. But that's coming.
Awesome. Right. So we're going to go to Lubin, then to here, and then we'll go audience questions again, and then we'll go back with, we've got James, Marcus, Jack. Awesome. So Lubin next. Lubin is one of our big supporters at Encode, one of the judges actually on Tuesday, and managing partner at Launch Up Ventures. So this is VC to VC style now. So over to you, Lubin, to ask.
Thanks, Anthony. Michael, pleasure to meet you here. So my question is actually, we have a very big thesis around dev platforms, observability, shift left, and all this kind of stuff. We have invested in many such companies. And from that perspective, looking at like the number of developers in crypto, it's just a joke. So my question to you would be actually with around some kind of adoption, mainstream adoption, which would be the early signs from your perspective to kind of look at early stage, at early adoption, mainstream adoption with regards to both devs and users. And again, we have great news around the S1 of Coinbase, Anchorage, Solare, Excel, Benchmark getting in big, but still, how about the devs and the users? And how do you see, which would be the early signs for you? Thanks.
Chris Dixon once said, you know, what the nerds are doing on their nights and weekends is probably what the future will look like. And I think that really holds true. And you hit the nail on the head. When we look at base layers like Ethereum or Solana or Polkadot, it's all about developer quality. And you have to view this in the lens of an operating system. Operating systems are only based around the quality of the engineering that's going into them, because that's the input into the applications that can be built or that will be built. In terms of kind of user adoption, I think we're starting to see that right now, frankly, once again, with non-fungible tokens. We've got Mark Cuban talking about it. We've got NBA players talking about it. You know, this is now going cultural. And we at Framework have been working with a number of musicians and artists who want to create their own non-fungible tokens. We did one drop with an artist named 2 Feet. He sold 1 million in NFTs in 15 minutes on a Saturday. And that, I think, is starting to bridge the gap between what consumers think is valuable, being able to have a piece of the artist that they care about, being able to even speculate on this, because that's a big component of it. And going back to what we were talking about with non-fungible tokens, if we can start to apply functionality to these things and not just have it be something that's visually appealing, that's where you start to have I came for the tool, but I'm staying for the network effect. And so I think we're starting to get there from a user adoption perspective, but what's lagging is the developer quantity. Every single portfolio company that we have is strapped for resources and just can't get enough. So I think what we're starting to see is a lot of what you would call Tech 2 or Web 2 moving into Web 3. And we're starting to see a number of people transition away from Facebook and Google, especially with work from home and the ability to explore new opportunities. You know, that is a shift that's happening. It's just going to take a little while for those people to really get over en masse and get to the quality of being able to write production level Solidity or production level Rust, whatever it may be. But that is something that's happening. It'll just take a little bit of time. And once that does, we'll start to see kind of the users meet up with the developers, and then we'll move to the next level, and then we'll move to the next level. So it is definitely a lockstep thing and something that we track pretty actively.
Awesome. Thanks, Lubin. And to that end, guys, we have, if any of you are looking for jobs, please do let us know. I'll paste the link to Encode Talent. We will help you place you in internships, jobs at blockchain companies. So please do get involved. Right to here is head of UCT, Cape Town Blockchain. Handing over to you, sir, to answer your question.
Hi, Michael. I wanted to ask you, with the rise in popularity of and amount of NFTs available, do you think the prohibitive price of gas prices on Ethereum's network would lead to another big platform sort of taking over as the primary network to host NFTs? Or do you think we'll see situations where NFTs will largely exist on their own blockchains? And if I can sneak another question in, I would ask, which NFT, if you could name just one, would you say is one to watch out for the near future?
So I think we're already seeing NFTs. You know, the largest NFT platform is on Flow. It's Top Shot. The problem with that is when you're on Flow and when you have content, once again, that's licensed by a major IP holder like the NBA, they're not going to let that content travel. And so it becomes a closed ecosystem in and of itself. Whereas something on Ethereum plus IPFS and Filecoin or some storage layer, that becomes kind of a novel way of having that content travel. If content is something that is valuable for the NFT, which I think is a large case in this point, I think we will, so gas prices are prohibitively expensive at this point. There's no question about that. I also think that the solution is right around the corner, or a solution is right around the corner. And so I think it's going to be largely a problem that's solved in the next 6 months. You know, we'll probably look back from here in maybe September and say, wow, remember how expensive gas was? And so I think that will change a lot of the perception around Ethereum and kind of where this stuff congregates. In terms of which NFTs I am excited about, I am really excited about, going back to an example I already talked about, artists that are creating things that have depth. And what I mean by that is And whether it's DeFi yield farming or sort of the actual games or the NFTs themselves, it's really about game design. And the ways that you create staying power is if you have a really, really complex game that people can't beat. And if they keep playing it, that's how they get deeper into the ecosystem and deeper into playing it. And it's a really good feedback mechanism. And so we're starting to see some artists come up with ideas where you can tie these things together and you put puzzles together. You can do things that you wouldn't necessarily be able to do otherwise. And so those are the things that I'm excited about. There aren't any that are out right now, but I know there's a number of people that are thinking about it.
Awesome. Thank you very much. Right, George, audience questions. Well, everyone's audience, written questions. Over to you, George.
So we've got one from Kane, which is asking, what advice would you have for someone coming from a financial background who's maybe lacking in technical skills, but really wants to get involved in the blockchain, crypto, DeFi space, and maybe perhaps work for an organization?
So right off the bat, I would say there's always all kinds of roles, especially now. As these ecosystems mature, it's getting to the point where operations, finance, strategy are just as important as technology. Because these organizations that are building these networks are scaling, the networks themselves are scaling, and bridging the gap, like I was talking about with DeFi, to the institutional side will require that institutional financial knowledge. So don't shy away from joining. The things that I would suggest are actually going through a Coursera or a Udemy course on Solidity. Doesn't mean that you have to become a Solidity engineer, but I do think that deploying a contract on chain just gives such a deeper understanding of how this stuff works. And playing around with a couple bucks in terms of yield farming in these different applications, I think builds a lot of insight. And so those would be the two things that I would suggest.
Awesome, thank you very much for that. And then the second one from Curtis, which is asking, what do you see as the kind of the major differences between the business models in a generic tech startup and a blockchain tech startup?
Everything. The ways that you build your defensibility are completely flipped. The ways that you build your engineering team are completely flipped. So what I mean by this is where you previously had a company that built intellectual property with technology, all of that technology is now open source. And so you have to remove that moat. Where we think about moats, and another example would be if you have the value in your company, if you have a really strong balance sheet, if you have really strong customer relationships, you can leverage that to get more revenue. Whereas now liquidity, which is maybe the proxy for that, is something that with one Ethereum transaction can slosh around from one application to another. So that's not a moat anymore either. And so in terms of moats for open networks, we think about it in twofold. The first is, do you have distribution for your product? The reason why Maker and DAI are so successful is because DAI is integrated everywhere. It's kind of the stable coin of choice for many of the applications, and that's not going anywhere. And so when you have the inroads into other applications, that creates natural demand for that asset or for that product. And then the second is your community. And this is kind of one thing that when we talk to our investors about how we invest, they kind of scratch their heads and say, well, what do you mean community? Why is that such, why is that a number 3 thing that you guys evaluate when it comes to projects? And what it really comes down to is you think about open source communities, that becomes your interface for your customers. That becomes your interface for partners. That becomes your interface for developers. And using the open source ethos as a proxy for decentralized finance or non-fungible tokens, that is the major difference, because you have to focus as a founding team on community, probably more so than just about any other area. Because if you're not spending your time interfacing with the external world, which is your community, I think you're just not going to understand it. Whereas with companies, you can get away with it for a while. You can go into a silo and build and then release something, and then poof, you see if it works. That's just not the case in crypto.
Awesome, thank you. And then one final one from Adam. Who are your favorite builders in this space?
Oh man, well, all of our founders would be what I would say. No, I think we've gotten to know some of the best founders in the space. The qualities that we really enjoy are having this unwavering perspective, having this mentality of this is either going to shoot to the moon or it's going to blast through the crust of the earth in the process. And we are here for philosophical reasons, not for any other kind of superfluous reasons. And if we can assess that in any core team, those are the people that we want to back.
Okay, thank you very much.
Awesome. Right, let's go to James, who is a student at Oxford. Over to you, James.
Cheers, Anthony. So I was checking out Framework's portfolio earlier, and I saw that they'd kind of had a clear preference towards funding their projects that they were interested in via a venture round. And there was one ICO investment. So I was made me think there. Do you think that DeFi will change the norm concerning the way that VCs invest in crypto projects, such as a movement to more kind of pre-sale ICOs rather than kind of equity rounds?
Yeah, so we invest at all stages and with all kind of mechanisms. Many of our investments are pre-launch. We're investing via, an investment contract. There aren't any tokens that exist. There isn't maybe even a project or a product that exists. There are times where we'll buy in from the treasury. And so we'll buy from the team after a token and a product has been launched. In other cases, we'll just buy on the open market, but we do that kind of much less regularly. And I think the ways that we're seeing VC change, in the summer, there was this whole kind of like anti-VC fair launch model. Most of them realized that without the right incentive structure, you're never going to be able to compensate the development team, or frankly, the backers of the system enough for them to stick around. So most of those have dissipated out in lieu of things that have the right incentive structure. And we may have done a circle, but we've come back to the same model of having sort of investment round, team allocation, but then also a lot of participation for users in the token.
Actually, that kind of makes me think then. So like there are some kind of platforms which are offering like they will kind of allocate funding to projects according to kind of a governance token. I think it's on Matic where people could use their tokens to kind of vote for particular projects they wanted funded. Kind of, do you think this will take off in any way?
I think teams that are building things that are novel need to be able to have sufficient capital to go off and build for what can be years, and having that incentive where you have partners alongside you who are also helping you as you build is a really strong one. And so I think it's difficult to have this crowdsourcing as the end all and be all for funding for projects. You just have to be able to write bigger checks if you're trying to do something that's different.
Thanks a lot. Cheers.
Awesome. Thank you very much. Over to Nicholas, who runs let me get this right, Global FinTech Network, which is a group of FinTech kind of societies and clubs around the world. And he is at the City University of Hong Kong at the moment. Right, I got that perfectly done. That was a long sentence to say. Nicholas, over to you.
Thanks so much, Anthony. So like Anthony said, my name is Nick. I currently study FinTech as a degree. It's new in Hong Kong. So my question is really more on that timing that you mentioned, more about the economic, I guess, current situation of DeFi as a whole. I'd really like to know how you determine if an idea at the moment is too far ahead of its time, if it's not ready to be developed. And if so, what are the sort of metrics that you look at to determine that?
Yeah, so we're different, I think, than most other venture investors in the space, frankly. We have, a 10+ year time horizon for most things that we invest in. And so that, I think when you have a liquid token can be difficult. And so nothing is really too early for us. I think if it's too esoteric or too undefined, that's the most difficult part. If the founding team or the founder has a very clear understanding of what they want to do, what they want to build, and how they get there, that's great. And that's really kind of all that it takes. But if it's sort of A to B to Z, and then they're shooting for Z and without the trajectory in between, that's just tougher to get behind.
Thank you very much.
Awesome, Nicholas. Thank you very much. Right, over to Jack, who is running the Cybersecurity Society in Cardiff. So over to you, Jack.
Yeah, great, thanks, Anthony. So first, thanks, Michael, for joining us and for your answers and things. It's really useful. So my question is sort of around identity management on the blockchain. So we've already got projects such as Latentry existing, which are trying to sort of solve this problem. I'm just sort of trying to get your idea on, how important is sort of identity management. I'm thinking kind of, around insurance and around kind of low collateral loans. So because the loans on crypto at the minute are generally quite highly collateralized, particularly with your project, your Teller project. I can see you can get lower collateral if you link your bank account and things. So that's sort of arcing into that that area. But yeah, so generally just your thoughts on identity management and sort of, if we can nail that and get a good sort of solid project that does that, would we start to see kind of the wider plethora of insurance and sort of loan accessibility, so things like life insurance and things like that, sort of in a decentralized way?
So short answer, yes. On-chain identity is coming. I think it'll just take different flavors. Teller is a good example here. It's opt-in. You get lower rates and under collateralization if you decide to tie yourself to an identity. So I think generally this is going to happen. It will also open up new application categories that just weren't possible before. And so doing this in a trusted way with private information is the key. And I think there's other services like Chainlink that have kind of this trusted decentralized node architecture where you can access information to verify kind of a binary question. For instance, is this person over the age of 21? Do they have enough capital in their bank account to be able to make this loan or make these payments? And it doesn't necessarily reveal any information, but what it does is it just answers the question in a decentralized way. Those types of systems where you maintain privacy, I think is kind of where we'll be able to expand the aperture lens of application categories. But I'd potentially be hard pressed to have something like life insurance on chain, just because there's so much of an analog connection that is required. Maybe something like smart contract insurance or parametric insurance, but maybe life insurance is a little bit further down the road.
Awesome. George, over to you to kind of on the audience question side.
Yeah, and if we've got any final questions, make sure to pop them in chat so we can get them asked. But we've got one from Rekka who asks, if you were graduating university right now and wanted to get into crypto, what would be your next steps?
Dive in deep with as much learning as possible. Podcasts, white papers, self-directed study, learn how to write Solidity, deploy something on chain. That's what I would say are the best places to start.
Okay, thank you. And then a final one from Mork, who asks, says, I'd say that DeFi links into the non-crypto economy are quite minimal, and which leaves DeFi overexposed to kind of the huge volatility in the crypto economy. So how does DeFi go about dealing with that risk? Is there a way to deal with that? What would you say?
I'm not sure that that's a huge risk. I think we've experienced, single day 60% drawdowns like we saw in March of last year, and still survived. Yes, there were some bugs and issues, but this is software. It's going to be an ever-growing thing. The things that I get really, really excited about are exactly the first part of the point, which is the tying of real-world things into a decentralized ecosystem. One of our portfolio companies, Synthetics, has started creating synthetic equities, and they've had synthetic commodities, synthetic foreign exchange, and now there's ERC20 representations of Tesla and Apple on chain. That's a seminal moment, I would say, for the DeFi ecosystem.
Nice. Okay. Yeah, that makes sense. And then a final one, perhaps from Mohammed, nice one to round it off and maybe leak some alpha to the Encode community. What would you say is the most underestimated project in the space?
Gonna go with Synthetics here. They have such a huge track record of delivering. They have so many things that are coming out in short order. The thing that I would say, broadly speaking, is go and spend some time in the GitHubs of these projects, because the things that are going to be in launched are already being worked on in open and transparent ways. And so if you have the ability to kind of go read through improvement proposals, read through some of the features that are being developed, you can see what's coming a month or 2 or 3 ahead of time. And that is one of the things that we use as a tool to assess kind of trajectory of where projects are going.
Awesome. Thank you very much for your time. I'll hand back to Anthony.
Also, I'm conscious we're pretty much out of time, so I want to ask one final question, then we'll wrap things up neatly inside the hour. So Michael, what would be your kind of rallying cry to the students, the next generation, on what they should be doing? What would you kind of say to them if you, all the kind of 20-year-olds, 19-year-olds, researchers, what is your one words of advice for them for their next stages of life?
That's a good question. I think what we are working on here is the future of finance. And I think if we think back to what the internet enabled, it created new ecosystems where content, commerce, information were democratized and accessible in ways that just weren't possible before. And for us to be able to go off and build what we think and we know are going to be the future application categories and the future companies of the financial world, people have to spend time researching, studying, diving deep into this. And I think, for anyone who is a curious enough individual, as soon as you start falling down the rabbit hole, it's going to be a long fall. So I would just encourage people to stay curious and stay interested and just try to follow as much of their curiosity as possible.
Awesome. Fantastic. Well, Michael, it's been an absolute pleasure. I know the students, the hackers, and everyone has really enjoyed it. So I just wanted to say we're extremely grateful to you for your time on this kind of Friday morning, or Friday evening for us, and Friday morning for you. And thank you so much for joining us. And yeah, to everyone else in the Encode community, it's been a good week. One hackathon over, one hackathon started. Fantastic airmade to finish. We'll get the YouTube and the Medium up, trying to get this up early next week. But Michael, again, thank you so much. And to everyone, have a wonderful rest of the day, and see you all very soon. Thanks again, everyone.